Speculative trades are typically short-term trades, and traders generally use them around major market events, such as corporate earnings announcements and central bank interest rate decisions. Traders want to quickly get into the trade, enjoy the profits that they hope will come from a quick move as prices adjust to the news from the major market event, and then get out of the trade. CFDs are often the investment tool of choice for speculators. One of the most important advantages CFDs offer is leverage. As you know, leverage allows you to increase your exposure while minimizing your investment in a trade. Leverage can enhance your gains in a speculative trade, but it can also enhance your losses. Speculative trading opportunities arise frequently, and most of them tend to have one thing in common. They are based on news announcements. Whether the news announcement comes from a government providing information regarding the employment outlook in that country, or from a company reporting its quarterly earnings, they have the potential to cause dramatic shifts in the market. The following are a few examples of news announcements that could lead to ideal speculative trading opportunities: breaking news, company reports, economic data, and index additions or deletions. You can take advantage of the price movement that follows a news announcement by doing one of three things. You can enter your trade immediately following the news announcement. You can wait for the market to process the new information and enter your trade once a new trend has been established. Or you can set two entry orders, one above the current price of the stock or CFD, and one below the current price of the stock or CFD, just before the announcement is released. Entering immediately following a news announcement is typically the most difficult way to trade the news. Stock and CFD prices tend to adjust sharply when the results of a news announcement is not what investors had anticipated. Depending on how quickly you get the news and how quickly you can enter your trade order, you may not be able to get into your trade before the price is already taken off. Most stock and CFD traders who trade the news choose to enter their trades once a new trend has been established. This is typically the easiest way to trade the news. Oftentimes, when a news announcement is released, the price of the stock or CFD will fluctuate back and forth as investors try to determine which way the stock or CFD will move in the future. Once these investors have determined which direction they believe the stock or CFD is going to go, the stock or CFD generally develops a strong trend moving in that direction. Placing entry orders before a news announcement is released is the most profitable way to trade if the news when you are right and the stock or CFD moves the direction you want it to. By placing your entry orders before the stock or CFD moves in one direction or the other, you assure yourself of getting into the trade. This method is also one of the riskiest ways to trade the news when the market whips back and forth immediately following the news announcement. For instance, if the price of the stock or CFD moves higher immediately following the news announcement, and then turns around and moves lower once the majority of market participants realize the news announcement was bearish for the stock or CFD, you will be knocked into the trade once your entry order is hit, and then knocked right back out of it once the stock or CFD turns around and hits your second entry order. One way you can prevent this from happening is by deleting your second entry order once the first entry order is hit. However, you will want to place a stop loss on your trade after you hit your first entry order. Whichever way you decide to trade the news, make sure you continue to follow your trading and risk management rules, because you never know when unexpected news may turn your trade against you.